Absolutely massive SPY put hit the tape on Friday. U.S. joins the war against Iran. Now over $37 trillion to the national debt and an insane S&P 500 correlation that could mean some more downside in the market. All that and much more in today's video. Smash the like button below, subscribe, and turn on post notifications. And without further ado, here we go.
From the White House after those unprecedented strikes against Iran's nuclear enrichment sites, 3 in all in Isfahan, Fordo, and Natanz.
So the U.S. has officially joined the war against Iran. That sent markets tumbling. First of all, weekend Wall Street is down over 1% right now for NQ. Second, crypto has been falling very hard based on this news this entire weekend. As you can see here, Bitcoin just broke 100,000 this morning for the first time in about a month and a half or so. So crypto's had a hard time. Ethereum's down even more. It's down like 10% since the news came out from the previous day. So both of these are struggling at the moment. And that shows a lot of fear for risk assets amid all of the geopolitical uncertainties. Additionally, Iranian parliament decided to close the Strait of Hormuz pending security body approval. By the way, 20% of the world's oil supply passes through it. So this would have massive implications to not only oil and oil prices, but also worldwide markets.
To close the Strait of Hormuz to try to disrupt oil transportation across the world?
Well, I encourage the Chinese government in Beijing to call them about that because they heavily depend on the Straits of Hormuz for their oil. If they do that, it'll be another terrible mistake. It's economic suicide.
What's even more interesting is that oil actually broke out of its key downtrend on Friday. You can see if you draw this downtrend, very basic trend line over here, we closed both the daily and the weekly above this. So it's undoubtedly going to have some positive implications for the price come Monday along with this news. So we can see quite the rally here for oil pending the conflicts in the Middle East continue to escalate. Something super weird though, the Tel Aviv Stock Exchange is actually up based on Friday's close, despite all of the news of the Israeli-Iranian conflict. So it'll be interesting to see how this opens when futures open later on this evening. The S&P 500, however, has not performed as well amid these geopolitical uncertainties. We actually saw the market fall again on Friday. Now, before I show you what the flow was on Friday, because it was actually really interesting, a ton of premium hitting the tape, I do want to briefly go over some of the technicals here on the S&P 500. The two levels to watch are the same as last week, 592.01 and 597.64. If you remember, this 592.64 level is the one that had a bunch of dark bull prints, like we're talking over $3 billion worth. And then 592 is another one of my pivots. Based on what we see so far on the news this weekend, as well as something like weekend Wall Street, it's likely we have some type of a gap down in the future session. What must happen, no matter where it gaps down, whether it's 590, 588, something maybe even more extreme, 586, we need to see 592.01 reclaim. If it is unable to reclaim 592.01, there is tremendous amount of flush risk a lot lower from under here. And all of this up here would act as a form of distribution. Think of it like a coiling spring. This is distribution here if we were to break down below. And the longer that it takes to consolidate, as it was doing here, the more power, the more coiling, so to speak, that it's building up until it's ready to spring either to the upside, which would be accumulation, or to the downside, which would be distribution. So what needs to happen, no matter where we open tomorrow based on the gap, is this 592.01 level must reclaim. So either from 586, 588, 590, whatever, we need to see that reclaim ideally on the daily candle. If it can do so, this will be saved and we can shoot much higher from here. My first target would be 602.70. Afterwards is 608.46. So I know it kind of looks messy on here, but I really need this to get ingrained in your heads because it is that important for right now. We do not want this to turn into distribution, at least if you are a bull, because this is something that can flush much lower from here all the way down into the 570s again. I'd say 572.34 would be the target if we were to close below 592.01. So really a bunch of risk, about 20 points of risk on the S&P 500 if it falls below here. Otherwise, if it can maintain this, there's still that potential for accumulation and we shoot off a lot higher. So regardless, going to go check out the flow right now. So a $10.2 million put order hit the tape on Friday, and this happened at about 2 p.m. Eastern, so about 2 hours before the close. This was really far out the money. They chose the 560 strike, and at the time it was trading at 594. for spot price. And this has a little bit extra time on it. It expires in December of this year. The reason this is super interesting is because it's incredibly rare to see a singular SPY put order for over 10 million in premium. We're used to seeing maybe 1 million, 2 million, or $3 million prints, kind of like we saw earlier on the session, like here, for example, 1.3 million. But a $10 million print that far out the money, like this one was in the money at the time, this 1 million print and some of the other ones as well. The fact it was that far out the money and also had that much premium is a lot of alarm bells ringing whenever you see something like this. It's rare, bottom line, definitely something you want to keep note of. And in this case here, it's very possible they had information of what could happen, at least one of the headlines that could happen on the weekend, because this person will undoubtedly wake up profitable on Monday morning, assuming we do get that gap down, of course. So in this case here, I'm going to continue to watch this order as well as other orders that might hit the tape come Monday. Will we see follow through to orders like this? Will there be more, maybe not quite $10 million, but will there be more 3 million, 4 million, 5 million consistent prints hitting the tape on Monday, where it could show potential for that distribution move that I showed you guys over here on this chart, where we have a breakdown and flush much lower into the 570s, or even risk this fractal playing out. This is the US 2-year yield to 30-year yield. And you can see here, there's actually a very strong correlation in both the S&P 500 price, which is the black here, as well as this ratio. And as of now, it would be pointing towards a lot more downside into 2027 if the fractal continues to pan out. So I'm not saying this has to happen by any means, but it's possible that if we saw that distribution breakdown and consistent put flow, that something like this could be a potential risk. That 592 level, though, is going to be everything. As long as that can hold, then this can be negated. Otherwise, definitely mark this, take a screenshot or like the video below so you can reference it in the future, just in case something like this pans out. I always like to look at both sides of the equation just to be prepared for any potential outcome. So wanted to share this as well. We're going to want to watch the put flow. Will that continue to take place Monday? Otherwise, if it doesn't, it's kind of flat. That could be a sign that shorts are getting exhausted. And of course, the opposite of that, if we see a lot of call flow, which did not happen, you could see up here on Friday, 74% put flow to 25% call flow. If this flips come Monday, that could also be a good sign that potentially they can reclaim that 592.01 level. So I'm watching all of that. Also, one other very key concept that I want to note from last week, if we look at the dark pool prints for all of last week, if we scroll all the way down, you can see there was a lot of premium down here. So first of all, we have 3.2 billion in premium at the 597.44 level, and then a little bit lower, 1.7 billion at the 597.02 level. What's crazier is if I scroll up a little bit, there was another $3 billion print from last week at the 597.61 level. So between just these two prints alone, this one right here and then this one over here, there's about a 15 to 20 cent differential, which is not much in the grand scheme of things. And that's $6 billion worth of signature dark pool prints alone within that range. So this and these levels over here, definitely mark it on your charts. I like to do something where I'll make it like kind of like a supply zone. So I'll show you here on the 15-minute chart. I know I have a bunch of junk from when I was drawing earlier in the video, but from up here, we know 597.64 from the previous week, not even the prints that I'm showing you over here on Cheddar Flow. The week prior to this, we already knew that that was a key level. And now that's been even more validated with both of these prints. So I can draw something kind of like this over here, where I start the top of the box around that 597.64 level all the way down to around 44 or so. This is going to be a key level that we must break if there's going to be consistent upside. So of course, we want to hold 592.01. Bulls want to see that hold for continuation higher, but then this is something that must reclaim if there is to be a lot more upside from there. Otherwise, this is just going to act as a supply zone. You can see there was actually a rejection on the 15-minute chart, very hard rejection over here before it continued to fall. So this is the level to mark on your charts for the week ahead and really the month ahead going into July, because this will have to break for a lot more upside. So I wanted to share that really quickly here. The last thing I will mention as well, something I found interesting, VIX Call Flow actually started to pick up just last week, and it was pretty much dormant for weeks prior to that. But if we go to the historical flow tab here on Cheddar Flow and look at the entire week, go to VIX, we can see here starting to see an uptick. We had a 1.2 million in premium for the 20.5 that was out the money. Also 550,000 for the 20 strike over here, and just a little bit consistent, starting to pick up across the board. These are very short dated. You can see for last week, these expired expired, the 618s, but then we also had some other put sell orders over here, premium collectors for the July expiration. This is the other thing I'm going to be looking at come Monday, because if whales start to buy even more puts, like I mentioned earlier, come Monday, plus we see a lot more either hedging or directional bets in volatility on Monday as well, then that's something we definitely have to worry about for the week ahead. Otherwise, if there isn't that much, it's kind of dormant again on the VIX flow as well as SPY flow. That's something we're probably going to see another buy the dip opportunity. So watching this very closely, I have my filters set. Typically look for about over 500,000 in premium here on Cheddar Flow just to see what big money is doing. I'll be watching that on Monday, and I will report to you guys around middle of week to share what we saw. Otherwise, as always, appreciate you guys watching this video. I'll see you next time.